What's going on, gang? Billy here from Storm Trades. It's that time again. Let's do another trade recap. This time we're going to go through my CL long trade from Tuesday, June 10th, 2025. Let's get right after it. All right, so starting on the daily, and this is going to be repetitive. Each one of these trade recaps is going to be super repetitive because not only is this helping me, but just sort of explain what I'm doing, but hopefully it helps you understand that trading is sort of boring and repetitive once you establish your model and what you're looking for. And that's a good thing. So once it starts to become boring and super repetitive, you start to understand your model in a way that you really don't until you make it boring and repetitive. All right, so I start on the daily. I'm looking for obvious levels, obvious price action, just from, this is the daily chart right here. Okay, this is obvious to me that we are going higher. We're closing strong bullish daily candles over and over again. So just as I'm looking at this without even marking anything up, I'm already sort of thinking, okay, well, it's pretty strong. But let's go ahead and mark up the chart the way I do every morning. So first off, oh, not there. First off, I'm going to mark out the previous daily low, previous daily high. I'm going to draw, I run a fib from the previous daily candle just to sort of see where we are when I'm starting to analyze the charts. And at this time, I also wanted to just take a look at, how we've been respecting the midpoint of the previous daily candles. Okay. So I'm just going to mark out the previous daily candle. All right. So we didn't even come close to the CE, the consequent encroachment on the midpoint of of that daily candle. Okay. And if we just mark out the day before that, we respected the upper quadrant. We wicked into the midpoint. So this to me just shows super bullish market behavior here. Now, we're always looking to short from swing highs and from bearish hourly fair value gaps, and to long from bullish hourly fair value, or excuse me, bullish internal range liquidity, and from swing lows. Unless the price is telling us that we're going to blow right through it, right? So when we have a strong candle close through a swing high, it's just another indication, right? Like we had here, it's just another indication that price wants to move higher in this particular case. Now, I do want to mark out any close internal range liquidity on the daily, and we actually have a large daily fair value gap. It's a large bearish daily fair value gap above us. So, here's the midpoint of that. I mean, I would look for us to move up into this lower quadrant. It's a good draw on liquidity. So that's it. I am bullish on the daily. How could you not be, right? Strong close through the daily swing high. Been respecting the midpoints of the previous daily candles. I was super bullish on this day, right? Even though we've had a number of days higher. That doesn't really matter to me. I'm not counting candles, waiting for a turnaround. I need to see how we're respecting or disrespecting liquidity. And we've blew right through this daily swing high. So I'm looking for us to move up into this internal range liquidity. I have a daily bias that is bullish on this day. All right, now time to move to the hourly. Now on the hourly, I am looking for the most recent changes in the state of delivery, and I'm looking for order flow. And so I'm looking for, are we disrespecting PD arrays on one side? Are we respecting PD arrays on the other? And as far as this week went, the first change in the state of delivery prior to this move where we are now happened right here. And whenever I find the change in state of delivery, I'm confirming that through the confirming that via the existence of a fair value gap. Okay, and look how we drove right off of there, created the change in the state of delivery. I like to draw a fib from that swing low to the swing high that took the liquidity prior to the change in the state of delivery, and we've already come up here and reached the -2.5, -2 standard deviation. However, we have started to close above that. And when we start to close above the -2 to -2.5, we then our next target is up here in the -4.5, -4. Now, order flow. Are we getting support by opposing candles? So, in other words, are any down close candles getting quickly supported and closed through, which are creating order blocks, right? So, well, yes, right. So we're building the narrative. That's all I'm doing here. I'm building the narrative. And do we have any internal range liquidity that we've most recently been delivering from? We do. We have a large hourly fair value gap here. And we have another order block here where we had a series of down close candles on the hourly, dip into this internal range liquidity, and then closed through that, right? I'm actually going to use this order block as my POI when I drop down to the execution time frame, as we started to test that right here at the close of the 8 o'clock candle. At this point, I am ready to go down to my execution time frame where I'm going to be looking for some sort of a sweep and move back up into the range, creating a change in the state of delivery. So in this case, a positive order block, and I'm going to be targeting the -4 to -4.5. So I'm going to put this sort of target thing up there, and let's move down to the M5 time frame. All right, on the M5, I am looking for a sweep and then a move back up into the range, preferably with some displacement. So let's move price forward a little bit here. Right. Right. Moving price forward. And at this point, we do get a sweep. Right. So I'm going to mark that out. Now, we could continue lower, but I'm just following price. Once we've engaged the POI and the hourly, I am now just following price. I could follow this down a number of levels. I'm marking out the sweeps, and I'm going to mark out what would be the change in the state of delivery each time, right? So in this case, the series of down close candles that took this liquidity, mark that as a change in state of delivery. If we get displacement up through that, I would look to frame a trade from there. Okay, so let's move price forward here. And at this point, we got a strong close through the change in the state of delivery. We had a M5 fair value gap here, and it looks like we're forming another one. So in this right now, we've already established a unicorn right here. Okay, that's a breaker block with a fair value gap inside of it. Right at this point, I look to put on a trade with the stop below the fair value gap down here. Okay, and I'm looking to target a 2R trade. All right, so I'm going to put in a buy order here as I entered. Hold on 1 second. As I entered on the close of this bullish candle, the stop loss below the fair value gap, targeting 2R. Now, what we're going to see here pretty soon is that we get another chance for a pyramid entry on a continuation. We're going to see that here in a minute. So let me move price forward a little bit. All right. Now, check this out. As soon as we had this down close candle that came into this liquidity right here, as soon as we get a close above this, this in particular one down close candle, okay, this is a great continuation entry. And at this point, I'm looking to see, do we still have room to run? Yes. I'm going to reduce my risk all the way up to my entry. I'm going to add a contract. That puts the risk relatively at the same. However, if we hit our target, we have now hit a 2.8 R trade as opposed to just a 2 R trade. All right, I have the same risk on. Okay, because I was able to move my risk up to my initial entry, I'm now looking to target the same target, but I'm able to get a little more juice out of the trade, right? So, and at this point, we got a little drawdown, but we got a target achieved. This was a really cool day. Got a number of trades this day that worked out. If you got anything out of this at all, feel free to like and subscribe. I really appreciate it. And trading every day in Unicorn University. Thank you guys. I appreciate it. Bye bye.